In light of it being tax season, I would like today's video to focus on what are the implications of a married couple filing their income taxes jointly or separately on their student loan payments, as well as what are potential savings amounts we have seen borrowers be able to get by considering filing their income taxes separately. Also, what are the implications on home buying, especially in tax season, if you were to file separately and experience a student loan reduction in your payment? What is the implication on mortgage? So that is what I'm going to be answering in today's video. If you are a student loan borrower, if you're a loan officer that works with student loan borrowers, please consider subscribing to this channel and liking this content. I focus on all things student loans with student loan updates in the news, as well as really expert pro tips on how to manage your student loans and how to go from debt to wealth building. If you like these financial tips, please like and subscribe. So let's get into it. What are the implications of filing your income taxes jointly or separately? I'm going to use an example of John and Jane, right, to anonymize the data here. Oftentimes we'll see, and it's not that two people with debt can't get married, but and that happens as well. I'm going to first start with an example of a person who has pretty significant student loan debt marrying someone who does not have student loan debt. Okay, so the general rule of thumb is if a person has student loan debt and they're marrying someone without student loan debt, that filing your income taxes separately and choosing a federal student loan plan that does not count the spouse's income is what is considered best practices. So a scenario that's real here, but I'm anonymizing it, is Jane. Jane has around $150,000 of student loan debt, okay? And Jane makes moderate income. She's a teacher. And she marries John. John makes a little more money, or around the same. It really doesn't matter. But John doesn't have student loan debt. But for Jane to file her income taxes jointly with John, they will take John's income and say, okay, John, since you guys filed jointly, this is your aggregate income. And now John and Jane's income will go to calculate the student loan payment for Jane. So effectively making John also have to pay Jane's student loan payment. There's nothing wrong. I mean, obviously people are married. They help each other pay bills all the time. But from a tax planning, not that I'm a tax expert, I'm a student loan expert. So I want to mention that. And oftentimes tax experts do not understand student loans. So I have to provide some of this insight, and it seriously impacts the home buying process and application as well. So this information is for tax experts, for student loan borrowers, and for loan officers, right? So now, let's say Jane, because John makes a little more income than Jane, she files with John, and effectively her payment becomes like $1,500, where if Jane filed herself, her payment would be around $500, okay? Because they also have dependents that Jane can count individually under her own income. So that's another reason her payment drops significantly, right? And dependence from a student loan standpoint is not the same as dependence for a tax filing purpose. It does not matter how, let's say, oh, they file separate and John claims a dependence. That does not matter. For the student loan purpose, you can count those dependents anyways for the student loan application purpose. So I want to make that very clear. Okay, so Jane now has a $500 student loan payment because she filed separately from John. So now when they go to the mortgage application and a lender says, okay, well, you have a $150,000 balance. If we use 1%, that means they would count $1,500 towards Jane's student loan payment towards the debt to income. That is incorrect. They can actually count $500 towards Jane's debt to income. That's a huge decrease. That's $1,000 reduction in the debt to income, which will literally get you a better interest rate, because right now Freddie and Fannie are going to pass a 40 basis point bump on high debt to income applications. So that literally could mean a lower interest rate. Okay. So for loan officers that did not know about the 40 basis point bump on high on applications with a higher DTI. I don't remember the exact cutoff. If it was 30 or 40% DTI. I have to go look that up. But basically, that could lower the interest rate. That could also boost your affordability, because $1,000 is essentially, depending on the interest rate, effectively 90 to 100,000 in boosted purchase power. Okay, actually more than that. So has a huge impact. Okay, so filing separate in this tax season would be an advantage for Jane and John. Okay, that's the implication of filing separate. Let's say, let me use an example of another couple. I'm going to call them Sue and Josh. Okay, Sue and Josh come in. They earn about the same amount of money. It doesn't actually even, they earn around the same amount of money, and they both have around the same amount of student debt. They both have student debt. At that point, filing jointly makes sense, because it doesn't matter if the Department of Ed is using both people's incomes, because it's also having to use both people's income to service both people's student loans. So in that case, it doesn't matter if they continue to file jointly. So in the case of Sue and Josh, filing jointly is fine, and they can continue to do so. But I do want to really quick highlight, and I'm going to minimize my face in this video, is here's a John and Jane example, right? John and Jane example, this is on our software platform. Everyone can get a free estimate and see this analysis completely for free. MyLoanSense.com, go to the consumer sign up side. You will answer questions, upload your student loans. We don't ask you for any money for this analysis. It's only when you want to move forward and book a session with one of our advisors and enroll paperwork. But essentially, here you will see that that will calculate. So if Jane and John were to file jointly, Jane's payment would be $905. If they were to file separately, their payment would be $564, right? By the way, I use an earlier form of income. Like, obviously we will, this is an individualized calculation based on both people's income, right? So spouse doesn't have a payment because the spouse has no student loan. So essentially what this does is we project, like, what is the annual payment and what is the total repayment length. And in this situation, by the way, the actual numbers for Jane actually has almost 200,000 of student debt. So I use 150, but in this actual calculation here, it's almost 200,000. Also, Jane earns not significantly less than John in this actual example. But the point is, the annual savings just from student loan payments alone is $3,000. Excuse me, it's $3,000 just in student loan payments, okay, annually. And of course, over the lifetime of repayment, we also will calculate that. So the annual savings versus the tax filing separate penalty, we will compare that and even share it, is the annual savings is much, much greater than the tax filing separate penalty. Therefore, a person should consider filing their income taxes separately. We have people all the time, oh, my spouse doesn't want to, my tax advisor advises us to file jointly. It's like, okay, well, go to your tax advisor and show them $3,000. Are you going to save $3,000 by filing jointly? The answer is yes, then it makes sense. But if the answer is no, then it makes no sense to try to save a few dollars by filing joint on the tax side. So I just want to bring this to people's attention. Again, for the purposes of mortgage, by filing separate, in this scenario here, it's lowering the payment by $300+, which, I mean, in this market right now with interest rates, every dollar of boosted affordability matters, right? So if you're a loan officer and you are struggling to help people understand what the best options are with their student loans, we're at LoanSense not only helping people understand the best possible plans, because the complication now comes, well, what plans allow me to file separate and not count my spouse's income, right? There are plans that even if you file separately, but you're enrolled, for example, in revised pay as you earn, they will always count both people's income in revised pay as you earn. We do not recommend, our software does have revised pay as you earn, and there are instances in which revised pay as you earn makes sense. But for married borrowers, we tend to stay away from revised pay as you earn and would more likely recommend pay as you earn or income-based repayment. Okay. And oftentimes mortgage loan officers will think that income-based repayment is the only option. That is not true. Those with Parent Plus loans will have to consider income contingency repayment, right? So there are multiple options just in what's called income-driven repayment. So not only will LoanSense advise on the best possible plan based on the person's tax filing status. Are they married, filing joint, separate, their dependency status? But we will also help people understand what are the implications of their tax filing, as well as what is the implication on their student loan, their tax filing, on their mortgage application, based on the type of loan. So if you're going for a conventional loan, Freddie, Fannie versus FHA, it also recognizes the student loan payment differently. I mean, not the student loan payment. I'm sorry. Whether you're in forbearance, repayment in school, it will recognize it all differently. And the action to get into repayment may require consolidation. That's another piece of advice that we help borrowers with. So to get an individualized plan, of course, myloansense.com, you get a completely free analysis, and we can help borrowers move forward from there. If you have any additional questions, we are on standby, and I hope you have this weekend is going to be crazy for a lot of people because people are doing taxes at the last minute. But I wish you all happy tax filing, and I wish you the least possible stress. Let us know if we can be of help, or if you have any questions. You are a borrower, or you have clients you're working with student loan debt who are coming through and trying to qualify for a mortgage. This is vital information. So please pass on this news. Thank you very much and have a great day.